Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we are navigating digital finance all together. And it's been a heck of a time lately, we'll say that much. And that is pretty much what we are discussing here tonight. We're going to be doing a little bit of an after-action report about what exactly was going on with the recent Bitcoin drop all the way down to $59,000, lower than our previous low of just a hair under 60,000. And then outside of that, we're going to be discussing four-year cycle theory and how it appears to be pretty much confirmed at this point, in my personal opinion, and what we could possibly be looking at for targets, time frame, and also price-wise. Outside of that, a little black horse story for the evening. The SpaceX IPO, allegedly to be the biggest IPO launch in the history of IPO launches. It's also coming to crypto. So we'll be discussing what that means, how they're doing it, and what it means for us, the regular markets, and all that kind of stuff. I'm your host for the Evening Zenith, as always, and I'm joined by my excellent co-host, Tracker. How you doing, buddy?
Doing well, man. Doing well. Obviously we got the big shakedown over the last week or two. Broke through some key levels that we had been positioning on. There was a great point of control right around in the box area of 65,000 ish area of Bitcoin, sliced right through there. But then it's bouncing around that 200 weekly moving average, which we'll talk about that here. But yeah, I'm ready to get into it, man. Doing well though.
Glad to have you as always. Well, with that being said, let's just jump right into it and pull up the chart and look at the aftermath. Okay, so good old Bitcoin currently sitting at about $63,000, and we had a recent low on the 5th of June at $59,000 and about $59,089. This is coming after when we had a nice little high all the way up here at about 82,000 back in early May. And now the rest of May looked very red. And we're trying to figure out what we're doing now and whether or not it is the end of a cycle. So with that being said, I do happen to think it is the end of the cycle based on just the aggressive nature of the low that we got here. So coming to our previous low, going out to here, we had a 68-day cycle. This is pretty much spot on for the range of probabilities that I like to reference when it comes to cycle length. Typically, they're called 60-day cycles for a reason. But at the same time, there's a length probability about where they can fall. Kind of imagine a bell curve, and that 60 is right in the middle. So they're going to be shorter, they're going to be a little bit longer, and if they're really short or really long, they don't happen that often. This one falls squarely right into the first standard deviation of our range there. So we had a high on day 38, and we had a 68-day cycle. Makes complete sense. The big anomaly for me on this one was the fact that we had a down cycle. I was anticipating this to be a neutral or an up cycle because we had pretty big drop before, and then the cycle after that one was pretty much nothing, slight up technically, and then this one had a pretty strong uptrend, and we were actually challenging some of the higher technical analysis indicators that we were looking at, specifically our moving averages. So we sat well above our 20-day moving average for a while, even above our 50, and we got all the way up to challenging the 200-day moving average. That is our long-term indicator. Unfortunately, we got rejected off that one 3 times, and then we broke down below our 20, down below our 50, and then all of the indicators stacked up back in the very bullish pattern that we're seeing right here, which is 20 is the lowest, 50 is the next, and then 200 is the highest, and they are starting to spread out. What that indicates is that there's an aggressive move towards the downside direction. So for people that are holding, it's bad news, but for people that are looking to get into the market, it could be potentially good news. With that being said, on the way down, we did pass some substantial levels that we've been looking at for a while here. Notably, this like 73,074 level, that was one to keep an eye on for us because we had a little bit of a high here, and then we had some support starting to form. But also this 75 level looked like it might have been some support as well. Didn't turn out to be much. And then after that, we were looking right at this it appeared to stop at 72. This was kind of a big question mark for us because there's not a whole lot of data supporting this 72 level because it didn't really stop anywhere previously. There was a small wick on the bounce back after the major drop down to 60K. But after that, no real data. So the next one that we were eyeballing was this 70,500 level and had a brief stop before blasting right through that one as well. This one had more support thanks to some candles here and here in the previous cycle and the one before that. But again, the red candles tell the story there. We kept dropping, even got below the cycle start low of 55,000, and then went all the way down to $59,000 effectively. The big thing of note for this one is that this low is technically lower than our previous low, but not by that much. It's really $1,000 difference, but at the same time, this one was bought up aggressively. This one was also bought up aggressively, but not quite as much. And what I mean by that is I'm looking at the volume candles here, which is that when we got down there, big instantaneous volume candles for trying to purchase up low price Bitcoin. Same here, but at the same time, I think because this,
Hey Zenith, put it on a weekly, and it'll be much more visible as far as like the massive volume, I think.
there you go. Thank you, sir. So yeah, looking at the weekly, the volume much larger on this one, much less on this one. What that indicates is that a lot of the people that were trying to get in, they were satisfied with their purchases, and there were more people that were trying to get in, but not nearly as many. So overall, yeah. And the big story on this one is we dropped all the way down below our 200 weekly moving average, which is a very much long-term indicator for whenever the price of Bitcoin gets relatively very cheap. And we drop below it. Currently, we are slightly recovering above it at the 63,000 level. 62,000 is that 200 weekly moving average currently. So that's the level to kind of keep your eye on at this point. But honestly, also, the 59,000, if we drop below that, that is what we're looking at as well, of potentially going lower to some lower levels, even though based on this indicator alone right here, this is showing that this is some pretty historically cheap crypto. I'm just saying. So
Yeah, it's basically at fair value right now for Bitcoin as far as like how we look at it. And that comes down to the miners. It comes down to a lot of variables of why that's a fair value for Bitcoin. The other thing to take into consideration is you put the 200 weekly moving average. I'm sorry, the 200 weekly moving average is king when it comes to Bitcoin. Anytime that it gets near that 200 weekly moving average or violates 200 weekly moving average, you're getting it at a very low. For the longest time, Bitcoin really never violated it. First time it violated the 200 weekly moving average, that happened on March 2020, and it was only for a very, very brief few days, like a week maybe. The next time after that, you got to go back to the FTX debacle, in June of 2022. Well, a little bit before that, but the cracks were already breaking down at that point. We did stay below the 200 weekly moving average from June 2022. And then we didn't finally get through back above it until March of 2023. So we could stay down there and go sideways for some time. But what we're saying here is the 200 weekly moving average has been a very good buy place and support for Bitcoin specifically. Ethereum, not so much. Ethereum can violate the 200 weekly moving average, but even for that, anytime that these violate the 200 weekly moving average, those are always a good entry point. At least historically, they've been a great entry point. And then looking at the volume indicators, that's another sign. You look at the ridiculous RSI. I mean, I think Ethereum got the worst RSI ever. It printed the lowest RSI, I think, ever, and it was down to like 12 or 11 on the RSI, something ridiculous, which is relative strength. Anytime it gets that low, it's not to say it can't go lower. It's just that for a swing trade, a lot of people will buy in those when they're looking at these massive exacerbations to the downside, overreaction to the downside, what it was. And of course, the big thing that triggered all this was people were freaking out because there's all these other macro news. Let's just call it what it is. The reason why the sell-off occurred was because Michael Saylor saying never sell Bitcoin, and he sold some Bitcoin and people were panicking. And don't get me wrong, that Bitcoin, that his whole thing, how he's given up that much yield, is going to eventually blow up. It's going to. It's non-sustainable at what interest rates he's given out to the shareholders. It's just not going to happen. And I know Tom Lee over with his Ethereum and his company, they're looking to do something similar. So, but it takes a while for these things to kind of unwind and occur. We'll talk about more about the timing, but I just wanted to talk more about the RSI and the 200 weekly moving average, the volume indicators. Like, these are big indicators. There were some institutions that were selling into this that obviously caused the sell-off some too as well. I know specifically like BlackRock sold a pretty good position in Bitcoin. And then surprisingly, on the same day, they bought, it wasn't as nearly as large position that they had sold in Bitcoin, but then they rotated that same day and bought a small position in Ethereum. So I thought that was an interesting, that I saw TradFi, mainly BlackRock, doing that. I thought that was interesting.
yeah, as far as the cause of why we dropped and why we dropped so far, there the Michael Saylor narrative is definitely part of it, but I think there's also a lot of other factors that went into it. What's kind of hard about this one is that I don't think it was one singular thing, but I think it was a handful of things that were actually working together to produce the effect that we're looking for. One, you already mentioned it, Michael Saylor selling Bitcoin. I know it sounds crazy to say the entire market moves based off one guy, but when one guy is one of the single largest holders of Bitcoin, excluding people that like are OGs from like 12 plus years ago, he's a significant force, and his opinion and his actions, more importantly, do hold a lot of weight, especially when his entire strategy up to this point has been never sell. And well, he sold. Granted, it wasn't that much. It was probably like 2 million ish in Bitcoin, like 32, 35, somewhere in there. But overall, it's not that massive. The other compounding factors that we got, liquidations got wrecked pretty hard. So as part of that, liquidations hit. So it moves price down even further to hit those guys. On top of that, we've also been looking at a lot of outflows when it comes to the ETFs in general. Over the last pretty much, gosh, all the way back till early May, we're starting to see outflows. Part of it you can chalk up to the sell in May and go away phenomenon. But at the same time, I think the price story also tells another part of that, which is that if you are a person that did not sell on the way down to 60K, and then you do believe it is going down even further, well, looking at this nice little run up to 80,000, it seems like a good time to get out, especially after you get your first capitulation down and a recovery. So this little area right here could have been something that scared people to have even more stuff go out. So let's look at the dates real quick. This is about the 18th, 19th of June. And where are my outflows? There you are. So 17th, big day. 18th, another decent day. Our other big day was the 26th and then the 1st of June. So if we go back to our chart and correlate that data, that means we're looking at the 1st of June. That's going to be our drop down to this 71,000 level, or really, we had another small drop, and then it starts dropping again. And before that, the 27th, well, that's the initial drop down to that level as well. So that's part of it. You got liquidations going on. You got people selling into believing that the red candle is going to fall even further, selling into that overall large scale volume of selling when it comes to the ETFs as well. And then also another little final point is that we got a jobs report in the middle of all this. The jobs report actually came in hotter than expected. I want to say it was about 170,000 jobs added to the economy. Granted, the unemployment did tick up to 4.3%, but honestly, that's very much in line with where we've been for honestly the past year. So why does a good jobs report indicate a loss in Bitcoin? Well, because it absolutely tanked everyone's predictions for the Federal Reserve meeting coming up next week. So pretty much crushed any chance of getting some sort of rate cut, even with the new guy coming in. So right now we're looking at 98.5% chance of no cut. And previously, I know 4.5% is not very high, but this is the glimmer of hope in people's eyes. And this is the glimmer of hope getting crushed. This whole thing was just kind of like a concert that worked well together to have the effect that we saw. Because like I mentioned before, the levels that we were looking at is like this 65 level I thought was going to be kind of a last line of defense, broke through that, and then broke below even where we were before that. Granted, it's not by much, but it is significant to note because it shows that it was able to get down farther because either all the limit orders were exhausted, and at that point, the market found natural support there, or it just indicates that people are just not as interested in buying it because they think it can go lower after where we were previously. So for me, the explanation is it's not a singular factor, but it's all of it together. It's the Michael Saylor news. It's the ETF outflows. It's the sell in May and go away. It's all the liquidations. It's the big red candles piling up, encouraging more people to even get out. And then on top of that, also any hope for a rate cut as trying to drive investment into risk on assets. Yeah, that's kind of gone out the window as well.
Yeah, I also put it on here that TradFi, most of the dumping I bet you is coming from the ETFs. The outflows is probably affecting most because people aren't able to stomach the crypto volatility as much as it is. People have been in crypto this whole time. I mean, we're used to this. I mean, we're numb to these moves. It's funny. I was looking at some people posting things like when they were freaking out about traditional TradFi after the stock market has run up. People are having a little bit of a panic because the overall stock markets have pulled back slightly, and it's comical. in crypto. Like I'm 10%, 8%, hell, 5% move. That's daily. Like I'm not even, so we don't even bat an eye in there. So I think this is also a learning curve for TradFi to stomach the volatility as well. And so I think that's going to play in. That's probably why people got a little shaky and took some profits and stuff too, which to me at this point, selling anything now, it just seems kind of, I don't know, seems way late to the party to be dumping anything right now.
There's definitely an analogy for trying to pick up pennies in front of a freight train, which is like, I understand if you're trying to make some gains off like even short to medium term trading, but at the end of the day, the overall macro market is heading towards the downside at this point. And I think that the end of this last cycle has really solidified that for me.
Yeah, but then you got people like a lot of the crypto influencers, and people have started. It's weird. Like the trend now is you're starting to see less crypto influencers, and they're almost switching over to like stocks, precious metals, real estate. It's like everyone's chasing all these other things because crypto just has fallen out of love. But okay, so how did that work out for everybody who rotated into gold and silver that are still holding? They have tanked from where they were. Yes, crypto's getting beaten up. I understand that, but you rotated out of one into another and you caught most likely the top. Now, for those who are still holding, you got to I just hope people took some profits in those metal moves. Like that's just crazy if you didn't. And then on the flip side, the S&P 500 and the overall markets. I mean, yeah, but look at the move that they've had. This pullback is nothing. This is just a little bit of a pullback. That's the other thing. I don't like minus a black swan event, obviously, but it takes months for overall markets to rotate over. That's why we were all kind of looking at that move between October of 2025 and all the way until March of 2026 in the S&P 500, because that was a textbook just sideways consolidation, almost like a rolling over of a market. That's what it looks like. But then we rallied up and we broke through to make new highs. So that's off the table now. So now you typically will look for that next 6 to 7 months sideways, kind of like, the battle between the bears and the bulls on that rolling over topping formation that would occur on a market. So it's time to unwind on that. But like we were talking in the green room, the biggest thing that's got me concerned about the overall market that people need to pay attention is these AI stocks and everything has gotten, and the semiconductor trades and all of this. This is what a bubble looks like. Things have just moved dramatically, and I love it when everybody says, "Oh, this time's different." It's not. Historically, this pattern repeats all the time. This is, I know I've been saying it on the show for a long time, but man, this is the .com 2.0 version all over again. I was there during that time. I saw the same thing. And it's this new shiny tool. It's going to disrupt the entire way companies and everyday work. And it's going to 100%. But people are getting ahead of themselves. And what they're not realizing is how much debt that these AI companies and the tech sectors, especially these data centers, are taking on. Massive amounts of debt that they're not going to be able to pay back. So now really what we're looking at is there's a chase right now. And there's a concept here where the people who are trying to run the semiconductors and all these data centers, and the reason why we care about it in the crypto market is because unfortunately TradFi is not tied to this stuff, unfortunately. So the question is going to become, are they going to be able to start showing massive amounts of profit and starting to live up to all of this hype that they have told investors and all this debt that they've taken on? Are they still going to show this crazy high valuation? Because the AI stocks, semiconductor stocks, they have been priced for perfection. So any little hiccup, you're going to have an absolute sell off. And that's how it's going to happen. And this other thing, some of this debt is coming up in March when they have to start paying back this debt that they own. And we're talking massive amounts of money. We're talking, $500 billion that some of this stuff has. And if the banks and the lenders start realizing like, hey, I don't think you're going to be able to pay us back. And there's no way these companies are going to be able to pay them back. It's just not going to happen. But then there's this psychology that they might be trying to build out this whole new super intelligence with their data centers to where they can almost bypass all that. Now it's a hard pill for people to swallow, but this is how these leaders, these companies are trying to function. How this is what they're looking at. They're almost looking like, if we can quickly build and get our infrastructure in place, then we don't even need to necessarily have to pay things back because we can disrupt everything around everything. So there's this little cat mouse chase going on right now. So are they going to roll over? Me personally, I think that it'll probably be a little bit of a both. Meaning, yes, they're going to be disruptive, but I don't think they're going to be able to pay back. And you're going to form another big bubble like this that's going to start having cracks in it, with which is the amount of debt they have. Some of these are 16 and 20 time leveraged, is what some of these companies have right now. It's massive amount of debt. So if that comes to fruition, the overall markets are going to roll over and tank. And I think that this bubble here is going to be what makes the entire market roll over. And I know most people are probably in that camp too. It's not going to end well. And then you throw in the fact with like all these IPOs coming out that are priced at ridiculous, I mean, was it 2 trillion or something for SpaceX? I mean, what percentage of that is the overall market? It's insane. So if this is what a real frothy, okay, you hear that term frothy market. This is what a frothy market looks like. But here's the thing, crypto has not done any of this. We've been left in the cold out here in crypto while everybody else has been running for a long period of time. So the question is going to say, is crypto going to stay decoupled from the overall markets, and is it going to do its own thing? So I know we're going to talk about times and when we think the bottoms will probably be in for, the crypto market, but I'm not saying this is going to roll over tomorrow. I'm saying though, nobody really knows when it's going to roll over, but a good time frame would probably Q1 of 2027, Q2 of 2027-ish, around that time. It could go longer. I don't think it'll necessarily be a little sooner. Plus that, you start leading into the other concept of where if the new administration takes over, and right now it's more, the AI run is more been driven by the Republicans. Democrats might be less for it, so they might start to pull back. That's another narrative that could come into play that could disrupt it as well, for the big push to go, the battle between them and China as far as who's going to be the biggest AI data centers in the world, that kind of concept. I know I'm getting off topic of crypto, but these are the things you got to look at macro wise. So because if you understand all this with macro and TradFi, it's going to be really interesting, because if our bottom is in crypto is going to come in, say everyone's been kind of looking at the end of the bottom of this cycle should be coming in, right around, we'll say Q4 of this year, could be anytime beginning October all the way to the end of November, maybe bleeding into December time, is when a lot of people are expecting the bottom to be officially put in. If you're looking at yet, but what happens if that is the bottom and crypto starts to move back up and the traditional markets start to get frothy and start to roll over? And we're going to have plenty of time to see that kind of transpire, but that's going to be the big question that we're all going to have to ask ourselves. Does the 4-year cycle stay intact, and does crypto decouple from traditional markets, or is it still going to be kind of muted because it's going to be suppressed by the overall markets and TradFi's, having its big tentacles all in with ETFs and so forth?
Yeah, I don't think the AI stuff is that far off topic, honestly. And the reason that I say that is that it's the overall market stuff you talked about. I think logistically, like supply chain wise and like market competition for just parts has also, it's undeniable that it's absolutely taken over. And then lastly, if you want to get even more specific with some of the AI crypto tokens themselves, I think there's a big argument to say that they did not perform very well because of the way that the overall AI companies have been working, and that people didn't see the AI tokens as viable. What I mean by that is the way that you actually spend the tokens. So the AI, the decentralized AI idea, and all the tokens associated with that, whether it's Fetch, now known as artificial supercomputer, or even stuff like Render, which is like visual AI rendering via blockchain, and tokens like that. Those require tokens burned to get product out. As far as the AI companies that we've been dealing with, they've largely been operating on a subscription model and trying to pull the Amazon model as well, which is operated a loss for years to try to capture market share and then try to make it up on the back end. It's been largely successful up until the last 6 months, to be honest with you. I think that we're seeing more and more stories come out where these companies just simply are not profitable for the amount of money that they're spending. And the reason being is that they're giving you $100 subscription per month to spend about $2,000 worth of tokens, honestly. You've even started seeing throttling during times of high activity and all that kind of stuff. And businesses have been starting to be forced to go to paying for the tokens that they're spending. Because of this, and none of the AI companies have gone public, it shows that A, they're probably not ready for it, B, it's probably not profitable, and C, yeah, this thing probably is a very large bubble. And if you look at how the S&P 500 has been running for a while now, the vast majority of the growth in the overall S&P 500 is largely focused around this AI stuff or any of the companies that are associated with the supply chains.
Large macro tech stocks, yes.
Exactly. The supply chains themselves. I think that you could argue that crypto has kind of got shortchanged this cycle because all of the hype was going into AI, building all the new graphics cards from Nvidia, building all the data centers, which they're way behind on schedule for, by the way. All that stuff is competing resources for the stuff that makes crypto, aka the literal hardware that upkeeps blockchain, and in Bitcoin's case, that does the actual proof of work modeling, computing, and algorithms. So if you can't make ASICs to mine Bitcoin, it means that the supply was probably sucked up by all the people making graphics cards for AI. That's a real competition and balance that goes on there. How much of that effect really drove what we saw? I don't think it's that much, but I think it is undeniable at the same time. And then lastly, the AI stuff. Again, because the AI companies that are offering the models to the public via subscription, I think they absolutely undercut the vast majority of the AI crypto projects that are out there, to the point that they did not really see that big of gains. Sure, they saw some uptrends, especially big growth during the very few and very short altcoin season that we had. But at the same time, I still think that it's just pure competition. And in the free market, you go where you're treated best. And unfortunately, trying to pay for the actual cost of stuff, as opposed to going to the company that's subsidizing you for trying to get market share, it's kind of a no-brainer for a consumer standpoint. But to your overall point, which is like, does this appear to be a bubble? Does this feel like .com all over again? Yeah, absolutely. When it's going to actually come out, we don't really know. And it's going to be when the pain is too much or the models are truly untenable and they can no longer sustain them anymore. So I think that the timing for crypto and the overall market and that stuff, I think it could line up oddly weird. And we could see maybe even a reversal of what we got going on now, which is that, yes, crypto is not hot right now. That is undeniable. Everything else people are going after, whether it's the AI stuff, precious metals, S&P 500, real estate, all this kind of stuff. We've seen a lot more transition towards those areas for people chasing yield and growth, which, by the way, part of it could be a bit of like the gambler's mentality. But at the same time, that's honestly just good investing, which is you want to allocate your resources where they're going to continue to grow. Does it make sense to keep resources in crypto during bad times? There's an argument to say no. There's an argument to also say yes. But at the same time, if you are just an investor that really looks at your yearly growth, you really want to try to maximize that as much as possible. If crypto is going through a 1.5 year bear market, you're going to end up negative. So then the savvy investor, it's a logical decision at that point to try to chase the growth elsewhere if you know that the growth is not going to come from this sector. At the same time, though, yes, I will also admit there has been a notable amount of people that are like, crypto sucks. I'm going to go try to get it on this gold thing.
Yeah, but see, that's just it though. So the overall indices, mainly like we said, the 100 large cap tech stocks have been doing that index has been running hard. But there's other markets that have been doing real well. The Korean market's been on a tear. The freaking so I was watching Sami a little bit. He was saying like, and he brought it up and I looked at it. I was like, I'll be damned, like all the Israel markets have been on a tear. It's funny like how there's a lot of markets around the world that have been doing very, very well. Everything's exploding, but it's all tied to AI and the promises that have been put out there. That's the big narrative that seems to be driving most everyone's markets. But the precious metal ones, I mean, I'm sorry, but we were kind of talking about this and people were saying, what did you think was going to hit first? Ethereum's going to hit 5,000, or do you think gold's going to hit, whatever target that they were saying? And I'm just like, I would probably bet my house on Ethereum just because gold's already had a huge run that hasn't had in 45 years. It's not going to happen. It's going to go down. And what's happening is exactly what I thought would happen. Now, is it starting, if you wanted to get into it, yeah, it's starting to get back down to attractive levels after this big run up, but you don't own gold and silver. Honestly, you own it for a safe haven to store.
Not a growth asset.
No. It's a store of value. Like when the markets are looking bad, it's where people go as a safe haven. Honestly, I wish I had a way to buy, buy puts and calls on the VIX if I could, because that would be the easiest trade in the world. I mean, you just get in low, get in high, would be the easiest trade ever.
Oh, if we
Or
could only
just
trade volatility, that'd be amazing.
yeah, but and then you've got so the precious metals that have completely gone. Now obviously copper has been starting to make a move, which is, that's actually tangible. That goes up because people are building and developing things. That's what goes into it. That's when you start seeing expansions coming on. So that's an interesting trade that's starting to work, is the gold. And gold, I'm sorry, gold. Copper's been working now since probably beginning of January. It's been moving upward. So that's a good sign. But once again, Ethereum and Bitcoin. So if we go back and look at the charts of Ethereum, actually look at Ethereum, because Bitcoin we already looked at. But so if you still think that your cycle lows are coming in around those times we talked about, which are going to be beginning of October to the end of November, that's when a lot of people are kind of looking at those cycle lows, right? That means you still have quite a bit of time. You got the entire summer. You've got basically, 4 or 5 months before you could actually see a bottom. What I'd love to see, though, is even if we go down just a little bit more, then as long as we can get some sideways consolidation and put in a nice floor in, that would be nice to see. Plus, that give us time more to do more DCA in at these levels, or lower would be great, because I've still got a lot more dry powder coming in. And I'd like to keep putting it to work. So that would be nice, because I still think it's going to be a good trade once things turn around. Now the question, if we're based on the cycles, you would be loading up in Bitcoin right now, not Ethereum. But I'm still loading more into Ethereum heavily, because I don't necessarily believe Bitcoin is going to lead this charge if we start coming out of the bottoms. I think it's going to be the Ethereum trade, potentially Solana and some of these other ones, being, Binance, ones that are going to be tied to the reward assets. Because once again, we're still hindering on, is the government going to allow them to start expanding with the Clarity Act? And I know we keep bringing up the Clarity Act, but, any news on the Clarity Act that we know of?
I think it got scheduled for, it got scheduled for something. I can't. Sorry, it's hard to read this. So thank you, Congress, for your terrible format.
The worst format. I think it's by design.
Yeah, can't even give me a headline. It's just like, oh yeah, it got scheduled for a thing. It's like, okay, which thing? It's like, I don't know.
Is it just for them to hear each other talk, basically?
Yeah, I think it's going.
Pitch.
It's not going to a floor vote on the Senate, but it's getting ready to. You gonna make me verify again? My own government. Thank you. Wow. Yeah, placed on the Senate legislative calendar under general orders. There you go. That happened on June 1st.
Okay.
Committee on Banking with an amendment in nature of a 7-2 without written report. Fantastic. Thanks, guys. But yeah.
Let's put it this way. If we can get some more movement on the Clarity Act and try to get some of that out of the way, and if we can catch, since everybody's so bearish on rate cuts, and we can get at least one cut, maybe 2 cuts this year, or catch people off guard, maybe he comes in aggressive and does some rate cuts, something like that would absolutely trigger a lot of things. But like you said, right now with the jobs market coming in hot, obviously we're going to find out real quickly, is he a Jerome Powell where he's looking at the data coming in, or does he have his own agenda? That's what we're going to find out. But I don't expect a lot out of the first FOMC meeting at all. I think it's going to be more of a just dog and pony show, and just him doing proper introductions and stuff like that. I don't expect him to take any immediate actions on this one, that's for sure.
No, I don't. Looking at the data, I don't see a need for it. And I mean, again, it is new leadership, but at the same time, it's not just one guy deciding what to do. It's everyone in aggregate. And as it stands right now, I think the aggregate is probably pretty happy with the data that they got. Yeah, unemployment's a little high, but as good old Jerome was saying, this is honestly pretty expected for a regular market.
Mm-hmm. Now, I will say this, even though Ethereum and Bitcoin have been, and most of all of crypto has pulled back, there's still been pockets of things that are showing strength. And I know in our membership, in our Telegram, we went over some of this in a deep dive, mainly around real-world assets, but also not just doing that, but going through kind of a checklist to start building up that shopping list of things that have been holding up really well, that have been doing well, and have a strong narrative. I'm not going to obviously get into it all here, but we went into, I dove into it and we talked about a lot of it, but there are plays and narratives that are holding very strong, and they're holding up very well, even though the overall markets have been pulling back. So there's definitely certain plays that are tipping their hand as far as good opportunities for people out there. And like I said, if this isn't the bottom, and I don't necessarily know if this is the bottom because the way the markets have been responding, but still, if we're looking at the lows coming in Q4, I would say you better have your shopping list ready to go. People that are still been on the sidelines and you haven't started nibbling back in, I after this drop now, I'm still highly skeptical that they're going to allow it. When I say they, I'm talking about the market makers. So you think they're going to allow it to drop down to 40,000 to allow everybody back in because everybody thinks that's going to be the place to get in? I would say probably we could get into a 50K print, but if we do that, that's a pretty big drop below the 200 weekly moving average, and it just doesn't normally go that drop. It doesn't fall that hard. I think you're asking for a lot. I think you're getting very greedy. But like I said, and that's the other thing you got to think about. If you did get out in Q4 of last year, congratulations. You don't have to pick the bottom. You've already saved a ton of dry powder and injecting it now at these levels.
Oh yeah.
Obviously not financial advice, but I mean, man, you should feel really good getting in right here, right now. And you don't have to put all your dry powder to work. You could put some of it to work, but at least, I don't know. If it was me on the sideline, I'd at least be 30%, 33%, at least 1/3, if anything, back in at this point. I mean, I think that's just nuts. Personally, I've been just DCAing in. Like I said, I got funds coming in constantly that I'm just putting to work, and I'm just going to keep building in powder. Now, I did inject powder on June 4th and 5th. I put funds to work, and specifically in ETH, I was putting in and building in more positions there at that level. Now at this point, I'm just going to build up a nice bag of dry powder because I've already got a lot of nice layers built in. And at this point, unless we have another big drop like we did now, I'm not taking any action. I'd like to see a little bit of sideways action for quite some time and see if this is the bottom or not. And then probably in, like I said, Q4, I'd probably put another big load of dry powder to work. Because like I said, I have no problem buying at these lower levels that it keeps want to keep coming in lower. That's fine. Because I'm still looking at where I still think Ethereum is going to be realistically. And that is, I still expect it to be, we really got, I mean, let's just face it, Ethereum got absolutely manipulated, ridiculously manipulated. And I'm sorry, you don't normally have 4 or 5 tops in a market in a stock chart like that. So it was absolutely highly manipulated. I still think we could see a $6,000-$7,000 print in Ethereum. I don't know if it's going to be, I don't want to say a time frame, but I feel like that's a realistic number. Could it go a lot higher? Absolutely. Could it hit 10, 15? Sure, if everything start lining up. But 6, 7, I think is much in the cards. That's why I don't have a problem buying at these levels here and keep buying more. And not just that, but other positions as well that I've talked about. But for right now, that's it.
Ethereum is a bit of an oddball for me because obviously it did not perform very well at all this last cycle. But then again, a whole lot of other stuff didn't. But if you're the number 2, you definitely should be putting up some numbers, especially if Bitcoin is outpacing you for pretty much the entirety of the bull market, outside of those weird times where we had like the drops from shorting and then recovery. Because if you take it on aggregate, realistically, Bitcoin outperformed Ethereum, which really shouldn't be the case because it's smaller cap, so it has more room to go. But because of that, it's like, what am I looking forward to for the next cycle? I think that if we're talking price targets for Ethereum, because we didn't even, there's 2 trains of thought here. Number 1, the old school convention of me is saying, like, realistically at this point, I think maybe getting a 2 or 3x from the old all-time highs is aggressive. And at that point, we're talking about $10,000 and $15,000 Ethereum. I know we've been playing clips of our boy Tom Lee, and he's saying it's going to $68,000 Ethereum. It's like, the conventional study that I've been doing, it just doesn't show that that's in the cards without a massive fundamental shift in the overall markets. And I'm not seeing anything that's really suggesting that. Yeah, there are people like Tom Lee trying to get in at the ground floor early, although they're technically not early, but by price wise, they're still definitely early. But at the same time, it's like, my normal chart brain says a 2x, 3x top for Ethereum seems likely, and even that 3x seems aggressive. And at that point, we're only talking like $10,000 Ethereum at the top,
right? And then obviously that's Ethereum. Now you look at all the altcoins, they're going to do, I mean, depending on the narrative that you're in, the positions you're in, the market cap that they are in, that's going to determine if those, instead of 2-3x's, that starts turning into those 10, 20, 30, 50x moves that you'll get in those altcoins that'll be tied, but they've got to be in the right spots. And we've been kind of outlining that as far as what areas to be looking at, which narratives seem to be going. And honestly, TradFi has been tipping their hand on where they've been investing. The one thing is, obviously Tether flipped Ethereum about a week ago after that drop for the number 2 market cap. And now Ethereum's taking it back over again. But stable coins have grown at a tremendous rate. They're outpacing everything. So that narrative's not going away. Like that's going to keep happening, and more you keep seeing it. Like I keep seeing things like certain banks in China are going to start, and in Asia areas are going to start creating their own stable coins. So to me, this is a play that the banks are going to try to create stable coins that are going to be able to rival that of the yield and plays that stable coins and the traditional crypto are going to be able to do. They're going to basically try to create products that are similar to those so that they don't have that threat. Because I think that this is a wake-up call to the banks that, oh crap, when they saw the Clarity Act game pass, that's what the biggest thing they saw. Like, whoa, well, you can't allow the yield. You can't allow 5-6% yield on stable coins. That'll destroy our entire markets and products that we give out. Yeah,
I'm still laughing to myself because I'm seeing reports come out about like people or bankers doing the math on what would potentially happen if they allowed that sort of yield. And they're like 30% of all savings accounts would just vanish. It's like,
well, the funny part,
they're gonna go chase where they're treated the best, and you guys aren't the best.
Correct. But then the other side of that is the bigger problem is that's when it would expose the entire banking fraud Ponzi scheme. They were like, wait a minute, what do you mean you don't have this money on hand? Oh yeah, we've leveraged it out 100 times. So yeah, that money, we don't even have any of that money on it standby. So that's the bigger problem because of the derivatives market. That would have really exposed it to say we can't pay this back because we don't have it. And then of course the whole thing, it would be, people would lose complete faith in the banking sector. And you would just have a run on the banks, essentially, is what would happen. And they wouldn't be able to pay it back. And that's exactly what it was. And that's, if you think about it, that essentially is how the banks were treated during the financial crisis. It was almost like a run on the bank. We don't have enough liquid to pay that. We don't have the money. Like we need money to be injected into the market. So I know it was the real estate market that triggered it all with those bloated, loans and stuff like that weren't backed by Fannie and Freddie. But what I'm getting at is there was essentially a run and there was not enough liquidity to everything seized up essentially. But it's funny in that, and then of course in that the gentleman who was notorious in the movie The Big Short, his name, he basically actually he's been shorting the AI stocks and the semiconductors now because he sees the bubble forming. But keep in mind, just like when he was shorting real estate and he was screaming at everybody like this is going to pop. It took a long time. He was way ahead of it. So I still expect this to kind of take some time to unwind. And like I said, I think it could go all the way until Q1 or possibly Q2 of next year before that really comes to roost. But like I said, we got plenty of time to see the traditional market, see if them start to that rolling over sideways consolidation typically will happen. We'll get that. And I'm not talking about a black swan event. Something happens or somebody gets freaked out. You see a big drop. You'll see as soon as you see that big drop in a black swan, you'll see an immediate snap back. And that's typically traditional markets. Once you see those big dumps, you'll see them come back in and they'll buy it back up. Because why are they sending the price back up? Because they got to unwind their books. They're trying to unwind their positions and stuff. So that's why you see that knee-jerk reaction on black swan events. That's why it gets bought back up quickly because they need to unwind everything. And that's typically what's happened. But I'm talking about a true rolling over of a market, going from a nice trend market going up to where it's rolling over and turning into a bear market. So
I hear you. Tell you what, let's try to close out this section. I want to do some forecasting for the future here. And let's start off with Ethereum to switch it up today. So currently we're looking at Ethereum's already down 70%, which is crazy to say. But it's not crazy to say it could potentially go down even more. As far as where I think the Ethereum low might come in for the overall market, if we're looking at 2027, we're not that far away from it actually now. We're half a year. Well, we're almost half a year away. We got to wait for June to finish to hit that halfway point. But at the same time, It's like we already came down to about 1400. This is back in 2025. Now we're already down to 1500 as well. I think that trying to figure out where the bear market low is going to be is harder for Ethereum because we had some crazy stuff happening because this was allegedly in the bull market when we had a 70% drop. That's not supposed to happen. I'm just saying. By the way, this is a
But
weekly
but
chart. This
but
is
but
long.
let me inject on what you're saying here though, because what I am going to say here is look at the 200 weekly moving average. Do you have the 200 weekly on there? Are these?
Yeah, that's that red line that we are
Yeah,
way under.
exactly. That's what I thought it was. So yeah, so we're way below that. And then look at it. The only other time it's gotten that kind of a move was what happened back in 2025. We've had a big drop. And what has Ethereum been doing now? And we already know the markets, and we already know the Ethereum price has been manipulated. I mean, look how many times we've had a top there. 1, 2, 3, 4, 5, roughly 5 tops. That typically doesn't happen, man. So the Ethereum price has actually been muted. We should have definitely had a more of a run up in Ethereum. It didn't happen for whatever reason. We can talk about this all day long with speculation, but I just wanted to bring that up to note that we're way below the 200 weekly moving average. Sorry, man.
Oh
Go
yeah.
ahead. Didn't mean to steal your
No,
thunder.
I hear me out. Does my brain tell me that we're going to hit $1,000 or sub $1,000 Ethereum? I think no, but looking at the chart, it's hard to come up with a reason why. And what I mean by that is, look, we already broke down below this in the bull market, and we're already down this far at 1500 now, and we're expecting even more potentially in the future. The question is, how much more? Okay, well, let's look at some support levels from our previous areas. Realistically, 1500, cool, we already hit that. Okay, what's next? Not much, because we're looking at like 1100 for these wicks right here. You can call this little aggregation of data maybe like 11.
1200 to I'd say 1200 to like 1,000 is probably your next POC after that drop under 1500. Yes.
Yeah, and then after that, we are just straight up looking at this $1,000 mark, and then our wick low of about 884. So, like, that's another 50% for Ethereum if we get that low, and it's crazy to think that we could. So, honestly, I think I almost want to say like 1,200 might be a psychological level, just because it's like it's not 1,000, and then 1,000 I think will be a very heavy psychological level if we even get down there. It's it's not outside of the world of possibility to see $1,000 Ethereum again, but at the same time, with everything going on, with the size of people that are purchasing Ethereum en masse currently, it's not just Tom Lee. There's other companies out there that are trying to do it, and I think retail is. I don't know if they've given up on Ethereum as far as like a backbone of a portfolio goes, but I think it's definitely done a lot of damage over the last cycle. But I think there will be a sufficient amount of folks that are trying to scoop up as much Ethereum as possible. They're not going to be able to outcompete TradFi and other large companies, but they'll be able to put in a solid dent as well. So, you know what? I'll just say 12, and if it gets real crazy, 1,000. Which, gosh, look at it, 1,600 right now. It's wild.
Yeah, if you do that though, then it's a complete round trip in Ethereum. Like it's a complete wasted. Like you're
A
now
wasted
back to
4 years.
levels. Yeah, you're going all the way back to Q4 of 2022,
Yeah,
and before then you're going back to Q1 of 2021 at those levels. I mean, that's kind of crazy to my opinion. I mean, yeah, it certainly could. Like I said, if it does, I will absolutely be backing up the truck. Buying
for
as
sure.
much as I can. I have no problem with that because the narrative is still intact. This is
True.
to me price manipulation. And I think unfortunately the leverage that's come in to this market is what I think is easy money to manipulate the price on. Like these institutions are making a killing on liquidating everybody. They can push the price, which is interesting. So let's bring up the liquidation map. Actually,
Oh yeah.
let's bring up let's look at that because I mean honestly, you could almost trade the price around what these liquidation levels are. So where is most liquidation? Like where are we looking at when it comes to the Ethereum price action? Like where's the next big like long positions or short positions?
No,
Because
I don't.
that's always been notorious for helping us, guide where we're going to most likely navigate to next.
I don't know if it's gonna let. Let's see.
I'm just seeing one of the comments in here. It's funny. Will saying bottom will begin in the next 3 years for almost for sure.
A wise bet, sir. A wise bet. Yeah.
That's a high probability there, man. All right, what do we got here?
Looking at 15.8 level. How do I threshold? I am on time frame. Let's go. Oh my gosh. Sorry, this is one of the people are happy to give you the Bitcoin liquidation heat map. They're not happy to give you the Ethereum liquidation heat map. So unfortunately, I think.
Let's look at Bitcoin. Okay, let's look at Bitcoin then. Let's just look at Bitcoin. We can translate that to Ethereum for the most part. Okay. Can we zoom out to zoom out to at least a week? I would zoom out to at least a week.
Okay. That 60,000 level looking like it might be stronger than towards the upside. And then outside of that, honestly, there is not much else going on.
Yeah, it's desolate down there. You can't even see past 50,000. There's a big gap down there between 55 and 50. There's nothing down there.
Yeah, and 62 then, appears to be the big level.
I mean, to be honest, to me, to make it go up, you could liquidate everybody around 65. Take it up to that 65 level or 68 level and liquidate everybody, and then cause the next leg down and take out everybody around 60, right around 60,000, which we're already kind of there now. Well, we'd have to go down a little bit more, but honestly, yeah, we could go down to 60 and take out that. But there's really not a whole lot, man, because they wiped out a lot during that drop. That was for sure.
That they did. They really did. So I guess as far as the liquidation goes, that's what I'm looking at. Let's look at the Bitcoin price though and see what we can try to muster up here. Still on the weekly. So looking at support levels, you could argue 52 has got some support there, even down to this like 48.9, 4,900 level. That'd be a pretty steep discount, to be honest with you. But the question is, if you want to compare it to the 200 weekly moving average, the moving average is going to continue to move up because all this data, and I presume that we're going to try to bounce around it or slightly above it just through this course of like normal 60-day cycles. So it's going to stay around the 62,000 level. You could argue that if we stay below it, it will start to drop, in which case it's not going to drop that much. Maybe getting down to like that 55,000 level is possible for this moving average as we get closer to 27, but that would take some serious action to get there. But at the same time, remember, with the moving averages, the old data also falls off. So that's why it's also getting updated to the current prices and stuff. So I think that 55,000 level is honestly the next big one I'm looking at. Outside of that, 50,000, I think, is just a massive psychological level. And as far as the low goes, I think that 55 is my average point, and 50,000 is going to be a low point. If it gets much lower than that, and I'm talking like, I could see it getting down to like maybe 49 to actually hit that support level. But anything like 45,000 and below, I just don't really see as, like, I give that like less than 10% chance happening. And I think that's very, very aggressive. As far as some of the other indicators that we're looking at, we can do a quick comparison real quick. So previous cycle, we dropped 70, 77, call it 78%. One before that, we dropped 85%. So it's not a whole lot of data to work with, but at the same time, we'll just call it, even if you want to go linear, because I think it's actually logarithmic, so it's going to flatten out over time. But even going from like 84 to 79, that's 5%. So that means that we're looking at a 74% drop. And what does that put us at? That puts us at 33,000, which is very steep. And because we didn't get as high in this cycle as we did in the previous ones, comparatively, top to top, I think that a 74% drop that's hyper aggressive.
I don't see it getting down there because everybody in the under the sun wants to buy it at 40. So there's going to be a massive buying wall at that psychological 40 level. Hell, I
True.
bet you're going to have people moving their prices up to like 45 now. So you'll have people moving in and buying up a lot right around. If it gets into the 40s, you're going to have a lot of buying.
That's true. I apologize. I know it's a little hard to see the chart with what I'm going for next here, so I'll pull it up full screen. Going for a trend-based Fibonacci extension, going from previous top low to the most recent top. We're looking at levels at 60,000 is our 0.5, and the next one below that are 0.618. That's 50,000 and change, like 297 or something.
Yeah, that seems a little bit more in line. Yep.
Yeah, that seems much more in line with a possibility. Again, that would be still pretty aggressive in my personal opinion, but the tool says that's the number. So just a hair above 50,000, that's what I'm looking at. After that, we get down below 40 at 39,108 for the 786 level. And then the 886 level is at 33,000. But if we get to that 886 level, based on all the stuff we know about these fib levels, if it crosses that 886, it's probably going to keep going even further. And if we broke all the way back down to $28,000 Bitcoin, that is well beyond any realistic metric that I've seen, and it honestly would trigger even more cataclysmic consequences for the overall crypto market, in my personal opinion. Alrighty, tell you what, let's look at some other ones because we have a plethora of bottom signals to look at. So let's go over to the old rainbow chart. Well, currently, according to this one, we're already looking for that low because we are outside of the chart. This blue band, according to these guys, this is the fire sale band. We've been in the fire sale band since February.
Dude, that's pathetic. Look at that. We couldn't even get into the yellow.
Yeah,
we couldn't even get into the orange. Come on.
Yeah, we stayed in this green band here, which is still the accumulate, and then the one above that is still cheap. So hear me out. Is the rainbow chart broken? And keep in mind, this is based on Fibonacci levels and a logarithmic progression over time. There's an argument for yes. There really is.
Oh, because a lot of these charts have.
Looking at this thing, we did not get that much useful data out of this thing over the last 4 years. We got some useful data when we were down here looking for a bottom, but after that, not much useful data. Even when we hit that all-time high early on at $74,000, we were still in the accumulate zone, which is crazy to say because we hit a new all-time high before the halving, which has never happened before. All right, tell you what, this one's not super helpful. Let's try another one. MVRV Z-score, one of my personal favorites. The green line is the Z-score. The yellow line is the Bitcoin price. Huh. Okay. We never even got above 4 for the bull market here. We hit like 3 when we made that first all-time high. We got a little bit higher when we had the election pump going on here. And then for our final all-time high, it was actually even lower than the previous peaks, both of them combined, because we like got 2.5-ish. This one was 3. This was like 3.25, 3 1/3. And now we're looking at like 2.5 for our all-time highs there. Currently, we are sitting just a hair above 0. And on this chart, anytime we drop below 0, that really is the signal for the bottom. So based on this one, I think this one still has some legs to it. It's better as a bottom finder than a top finder, in my personal opinion. And if that's what we're talking about this one, then yeah, according to market value, realized value score, bottom's not in yet because we're still looking for a negative number here. And we are still sitting positive right at, gosh, give me that number, 0.3.
Yeah, I sent you another one. To me, it's a little easier to read at home for everybody. It's just it's the same chart. It's just, it's easier to read. Like we haven't got it. Yeah, there you go. That's the one that I've always looked at. Yeah, once it's in green, that's a back up the truck type thing. But man, we are awfully close. That's what I'm saying though. So if you've already been on the sidelines this whole time, getting in now, at least something is, and you got out, if you got out towards the top, then you're doing just fine. But you can look how muted that Bitcoin rally was that we had. How pathetic was that? I mean, compared to the other ones, it's minutes. I thought we would at least get up to the 5 level, the 5 score, maybe the 6 level, as far as where you want to start unwinding profits and take. I knew it was going to be earlier. I didn't think we were going to get to the 7 or 8 level. I didn't think we were going to get that high in this run, but the fact that we only got that was just kind of pathetic. And I'm sorry, but I have to strike it up again. TradFi is here to muck things up.
True. Alrighty, let's try another one here. Bitcoin, supply and profit versus loss. Okay, well, tell you what, let's go to some
I
more
got this
recent
one
data.
too. I sent that one to you too. This one's also another chart. You can see it's a little easier to read too.
Yeah, as far as the previous lows go, we are technically lower when it comes to the amount of people in profit versus loss. Currently ticking up to about 53, but we hit our low there of about 43. Going back to the old 2018 low, looking at 42%. So haven't beaten that one just yet, but at the same time, getting pretty low. 2022, this one was 48%, and we have beat that one for sure. So you could argue, based on this chart, that we have already seen the low. I think the time argument is a little bit stronger because it just is 4-year cycle is held a lot stronger than any of these other indicators because the indicators are tools to help us find the other stuff that we got going on. So yeah, let's see. Oh, how could I forget? Pi cycle top.
It wasn't much of a top. Never happened.
I hate to say it. This one was one of the biggest losers when it comes to indicators.
Yeah, because it'd been pretty much spot on. It had been really accurate up until, I mean, very accurate, and it never happened. So it never even got close to triggering.
Yeah, I think the biggest kind of detriment for this one is the fact that if you look at the indicator, the closest that we got was actually here in the summer of 2024. That's June. This is after we already hit all-time highs. Got close to it again, but was even lower. And then after that, the next high further away, the high after that even further away than that. So, I mean, I'm pretty good to almost declare this one dead based on how this like last cycle goes. And if we get anything else similar to it, then this one, honestly, not that helpful.
Well, not even that, but I think it just shows you that never did we get anywhere near a top on all the other historical data when it comes even to Bitcoin. And forget about Ethereum in
Oh
alt season. That never even happened at all. There was no movement hardly. So yeah, I'm sorry, but I think TradFi is. I'm still going to hold the thesis. TradFi is coming in. They can push this market around at will because it's such a small market cap. The overall crypto market is still a fraction of the silver market, which that's small in grand comparison. I mean, it's tiny. So that's why these things aren't working anymore. I think it's just they've muddied up the waters and it's not the same. Now, who's to say? And they certainly didn't on all the other indicators that were telling us like, oh, hey, these indicators that always worked in the past, none of them have worked. None of them have worked. So it tells you that everything's been muted. And the only way you can mute something is if if there's a less buyers or suppression. And I still think the derivatives market on the ETFs is probably it, where you're putting the puts and calls and liquidation levels, and people are doing that. I think that's another tool that they can use. So I'm not saying it's all dire. I'm just saying I think until crypto, it's big blow off or big move you're going to get is when you can start solving real world problems. And everyone always feels that AI and crypto are going to be that couple, and at the same time they're going to be really solving real world things that need to be done. So that's why we always talked about in the past real world assets. When that starts to happen, then you're going to start to see much more movement, and that should translate over to the altcoins as well when that happens. But yeah, to go back to what you're saying on the ultimate bottoms, yeah, the overall, but see, that's what I'm saying. We never really got true tops. So who's to say we're ever going to get a true bottom on those indicators either? So that's
Also
why,
accurate.
yeah, and that's kind of where I'm going with now here. Like, you can play that game and wait for your ultimate bottom in those indicators, but you never got the top. So who's to say you're going to get the bottom? And you might be sitting on the sidelines if you're still on the sidelines. That's what I'm saying. Go ahead and moving in positions like we've been saying. Go ahead and building some DCA levels is not out of the question. I'm not saying you got to ape all your whole bag in, but I'm saying like you do need to start positioning yourself into these. And getting yourself some exposure, at least to the large caps, like the Bitcoins, the Ethereums. Honestly, I don't want to have a problem with the Solanas and the BNBs, but like I said, there's also other altcoins that are working, and they seem to be holding up much better than these large caps because of the sectors they're in. And those are the things to keep an eye on as well. So, but if we get another push to the downside, things are going to go down right with it as well. like I said, it's going to be an interesting time. But like, I still think with the volume you pointed out, I like the volume. I like the RSI. I mean, everything's telling us we're oversold. So if anything, we should still maybe get a bounce. So what about the 60-day cycle on the chart? Do we think we're going to see some type?
Sorry, you cut out there at the end there. What was your question for
No,
the
I was
60
just
days?
talking about the 6-day cycle. So what's the 6-day cycle on at least on Bitcoin and maybe on Ethereum? Could we see, where could our 60-day cycle high be if this is the beginning of a new cycle?
Oh my gosh, that's the
Loaded,
question.
a loaded question.
All right, well, I'll tell you what. We'll pull a retracement here. If we're looking at it, well, here's the question: do you think we're going higher or lower than the last one? If you think we're going higher, it means we have to hit this 79,000 level. If we hit the 79,000 level, that's our 886.
I
If we hit
don't
that,
think just do
odds
that.
are we go higher.
I don't think that that's what you're going to see here. I still think
No.
we are going to be going sideways to sideways consolidation with more of a potential either sideways or a next leg down is probably what we'll have here. Now, how far down, who knows? And I don't know if it's much more. Like I think we've already talked. We beat that up already. We're thinking, the 50K area, maybe. I mean, it's still not. It's not out of the question by any means. I just think you're going to have a lot of buyers stepping in. So if it does go down there, I think you're going to have more of a snapback like you did in what happened in the beginning of February. I think you're going to have more of that action snapback. Now, could I see this, a bounce back to the 50 fib level there, which is interesting because if it does, that gets you back close to that 60, that 2000 psychological level in ETH if it does bounce back. I'm looking at the ETH price, but and it gets you back to what, 75? Yeah, it gets you back to around that level. I mean, I'm talking on the 50, on your 50. So that's right on 71 in the Bitcoin price. So could we see a bounce there? Sure, we could see a bounce there, just a recovery bounce, and then hitting some resistance because that pocket of control, that POC, was we sliced right through it. So logically, if you're going to bounce back, you're going to get back to that POC level, which is the middle-ish of that point of control.
Yeah. Looking at the moving averages here, I expect our 200 daily moving, especially at our midpoint in the cycle. I think 75,000, 74,000 and change is probably where it's going to end up. Granted, that's right between our 786 and our 618 level. I could see getting back up to 72.8 as maybe the cycle high. Even if it kind of doesn't do great, 70,000 is also our 0.5 level. So that's another potential cycle top there.
So do we have an idea when that top, the 6-day cycle would be coming in normally on something like this?
Yeah, looking for the 4th of July because that's our 30-day point.
Okay.
Yeah.
4th of July. Well, who knows? Maybe on 4th of July they actually declare it. It's surprise everybody, get the Clarity Act signed or get it passed through the Senate. That would be nice. The 4th of July.
Yeah, it would be nice.
They got in before then.
I kind of doubt it though.
Yeah, I know. It's got a very low probability at this point. That's what I'm saying. If they could pull that off, that would be a hell of a surprise.
It would be. Yeah. As far as the moving averages, obviously we got to contend with the 21st, then the 50. I think if I had to guess, the 50 is going to be the big one that we're interacting with this cycle, just because we got definitely rejected by that 200 this last time around. And if that's the case, then I could see that 72 level that lines up decently well with the center, maybe even a little earlier on in the cycle. So that's what I'm looking at. You did forget the magical third option about the cycle. Do we go up? Do we go down? Or do we go sideways? And honestly, I could just see sideways. I could see sideways for a good bit until we get some real weird, wacky news situations going on.
But you could typically see is when just like you have a breakout to the top that fills the gap, you typically have when you have a drop, you have a retracement back to fill the gap as well. And if you're just looking at a 50, like on the Ethereum price, that would get you back to close to that $2,000 range in Ethereum, where you're going to be hitting resistance at that point, and then maybe it goes back down, and that's that sideways action. I could see that kind of transforming as well. I think that the volume in the Ethereum was much more substantial than it was in Bitcoin. Like if you saw the massive sell candle that happened on June 5th, it's more in line with exactly what happened on February 5th as far as the volume. So it was more prevalent. That's what I'm trying to get at compared to Bitcoin.
Yeah, that is an interesting little note there for the Ethereum chart. Looking at the volume there, bigger single day but this one had 2 pretty big days and a couple larger scale days beforehand. Granted, we had a couple of this time around, but also the single higher day does tell me that there is more purchasing at a very specific level, and that specific level is right between 1550 and $1,500 Ethereum.
Yeah, it hit that psychological $1,500 level. That's pretty much what it is. But when I went back and looked at it, anytime that those levels hit, it puts in a local low for that time. I mean, you got to go back. I mean, the only time we had volumes at that level was on April 7th, and that was the bottom of Ethereum. And then it turned around and started going back up. The next level we hit there was on February 5th, and we went into a more of a relief rally, but it also was moving up from that low, which was right around 1750, hitting highs close to 2,500. So a substantial, recoup. Next levels, you have to go back at hitting those kind of levels. You got to go back to where we put in a floor. We still had a substantial counter rally on August 6th of 2024. I'm going back looking at the other volumes out here. The next time you see volumes that are bigger than that, you got to go back to Q4 2022 when the ultimate bottom was being put in. But you were getting these big candles printing during that time is where I'm going with it. And even on the FTX collapse, you had sell volumes, higher, but still those are big spike red candles that were coming in. So those volumes, those large sell candles have normally been a pretty good indicator, accompanied with all everything else we've tacked on tonight.
True. All right. I guess to wrap it up
below
there,
the 200-week moving average, all these other things. It's telling you you're getting a lot closer to the bottom. You're getting very close to the bottom and not try to play around too much.
That's true. Yeah. I guess is the final note here. Do you think the prediction of like 1,200 Ethereum, 5,500 as our midpoint, and then the true lows of like maybe a hair under 50,000 and like actually hitting $1,000 for Ethereum? Does that seem reasonable?
I think if that happens, it's going to be bought up so quickly. It's going to be snatched. It's going to snatched up really quickly. It's going to be one of those. You better have a flash wick, but then you might see sideways consolidation much higher, building at that floor. But I think you're going to have too many people waiting. There's so many people who were in the 4-year cycle that were waiting, who have been waiting patiently. And if they see those kind of prints, I think they're going to step in and buy. Now, maybe not put all of their money to work, but they're going to step in. There's going to be an extreme buying pressure at those levels, certainly. I mean, I think that's just what it is. And that's the other thing. If that starts happening closer to the cycle lows, which are going to happen where everyone's predicting right around Q4, then yeah, I think you're going to see everybody just load back up the truck at that point. I think you're going to see a lot of people buying, and then it comes down to the institutions at that point. So I don't know. Like I said, we'll cross that bridge when we get there on that piece, but I still think we're moving sideways to consolidate. I mean, ultimately, when we were talking last, I was thinking, I looked at the point of control, and there was a really solid pocket of control. And those other charts, on-chain charts, you can't even rely on them anymore. I mean, yeah, you can in a sense to say, the tops never happen. I don't necessarily think the bottoms are going to happen. So once we talked about what's max pain, well, max pain would be I'm not going to tip the hand and show you what the true top's going to look like because and I'm not going to show you what the true bottom's going to look like. I think they're going to catch some people's offsides. I think they're going to catch a lot of people off sides that are still waiting for this 40K print that everyone's talking about, or a 40 handle. We'll just say, when I'm saying 40 handle, anywhere in the $40,000 range, 49 to 40. I just don't know if they're going to let it get down there.
Yeah, it sounds about right.
Because if they don't, think about it, if they don't, that's going to feed into catching people off sides, and market makers love to do that. They like to be early or reverse trends, because when they cause that, then that causes that FOMO to kick in, where they're on the sidelines, and then those people that start to finally give in because they've been on the sidelines as they've seen the reversal happen. Now you're just playing. How long are you willing to wait and watch this price rise? How much pain are you willing to be on the sidelines watching this go up? And then people just start giving in over time, and that just causes the FOMO to turn trend. And that's typically what ends up happening. But like I said, like we talked about today, the traditional markets are still very strong. Even though I think they're absolutely getting very frothy, but that could go on for quite some time. I mean, even the financial crisis, all these other crises, the real estate crisis, everything that ever happened, it takes a long time to unwind that mess to really come to fruition. But when it does, it's just nasty though. So I think it's going to be nasty. I think it's sometime in 2027, it's going to be a really bad year for stocks, and that could go on for quite a while. I think you could see a really tough time in the stocks because of so much debt and interest rates staying high like how they've stayed. And rates have got to come down because that's one area that hasn't really moved much. Real estate has not done a lot. People are like, oh yeah, my house is worth more now. Yeah, but that's inflation. That's not your house. Like, the problem is the real estate market really hasn't done a lot. And the reason why it's not doing a lot is because people have higher interest rates on their loans. So if you have those lower interest rates that come in, people can refinance their house. That frees up capital. Now they can put more capital to work, and that's what it unthaws things out. So until they can lower rates, that's how we're going to be. Now, could I see the administration come in and try to aggressively force the hand and say, we're just going to start cutting some rates, because they know they need to restructure debt and get that in, and that might be a little economic pump and boom to try to look better for the elections coming up. That's potential too. So I don't know. They've got to fix the interest rates. Interest rates are too high.
Yeah, I think we're also going to deal with the history of the interest rates for a while, which is that everybody that got locked in at like 2-3% back in the good old 2020 and 2021. I think that's going to be something we're going to have to contend with, probably honestly, for like the next decade.
Yeah, well, that's the other. Well, the scary part about all this is not going to end well, because this is one thing I've been asking, and I can't seem to really know how this game is going to end. Is they're using stable coins, and this is why stable coins have been exploding in how much market cap they're starting to grow, right, in the crypto market. And they're using them mainly, well, yes, they're buying other real world assets, and I understand that, but the big one they're focusing on that's been exploding to the upside has been US treasuries, aka US debt, right? Well, they're using it to buy debt. How does that end? That's the thing. I don't know. You're printing money, but then you're putting it into stable coins. You're using stable coins to buy US debt. How does that whole thing unwind when it's all said and done? Like we're coming in, and I guess we'd have to compare it to other vehicles that they've done this with in the past. Not really, obviously not crypto or stable coins, but what other vehicles have they used to buy up US debt? And typically that's other countries buying up US debt. So I don't know how this ends. And of course, if they start printing more money, that just exacerbates the problem, which keeps getting us to where we're at. So
old reliable solution right there.
Now, don't get me wrong. This could go down, but we could be down this rabbit hole. We could be talking this till we're like 80 or 90 before. Yeah. But what I'm getting at is that's one thing I don't know. I'm curious to know, how is the stable coins going to be affected by this buying up all this US debt, and how much they're accumulating, or is that going to be some type of big rugging that occurs in stable coins? I don't know. That nobody really knows. I don't know how that's going to end. If anybody wants to chime in here, go ahead and ask. I'd love to know. I've been researching. I've been trying to find out how this sucker ends, but it's not like I can't go and get a clear picture on the stable coins purchasing US debt.
True. Very true. Already tell you what, we are already way over time. So for the folks at home, apologies, we did not get to the fun hot topic, which is the SpaceX stock is coming out on Solana. I'll post this one in the private Telegram, and then also try to record a small live for it. Additionally, there was another.
Hold up real quick on that one. AKA, not financial advice, but do not buy into this IPO at all. Do not touch this thing. This thing. Don't touch any of these crazy IPOs come out right now, unless you were fortunate enough to get on the list to buy it at a much discount or something like that early on. Then congratulations, but it's most likely it wasn't anybody listening.
Yeah, this one's going to be especially aggressive because it's SpaceX, and a good chunk of it is tied up in just the cult of Elon Musk. But we'll get into this one more later on in the private chats. Which, by the way, if you guys want more of the show because you like it, you love it, can't get enough of it, you can get unlimited access to us inside of our private Telegram, where we have exclusive live streams going on, along with the entire video archive of all the exclusive stuff we have done in there. So if you're interested in that, that's where it's all hosted, on top of the rolling chat where we post the latest and greatest when it comes to what we're thinking for the day, when it comes to price action, moves, tokens, analysis, all that kind of stuff. But more importantly, all of the questions and answers, all the questions that you have, we have answers for. So that is where we try to, help everyone get up to speed as quickly as possible, so we can all start working together, generate some good research, generate some good ideas, great alpha, as we like to say in the biz here. And that's what we got. So around these parts, we like to say the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&A, go from beginner to intermediate to expert with us. Because when we all work together, we can all win together. Alrighty, sir. That is what we got for the evening. Some price predictions, a lot of analysis of what went wrong in the last 2 weeks effectively. But outside of that, any final thoughts before we get out of here, sir?
If you've been DCAing in, there's no shame in that. I certainly have been. For those that have been on the sidelines, after this move now, if you haven't taken anything, I don't know what to tell you. Sorry. I don't know what to tell you if you're going to get back in this market or not. But and then the other side is obviously I would not be touching any small cap, altcoins or anything like that. I personally would not be touching any of that, not until we find an actual solid bottom being put in. And based on what everyone keeps eyeballing, Q4 will probably be that time where if we've been going sideways, and even though we haven't got down to these $40 or even $50,000 range, that's probably where people are going to say, okay, fine, enough's enough. And that's when you might start seeing the buying power come back in. But I wouldn't start loading up in anything now. Now, there are a lot of good altcoins out there, like we've talked about. But it's just, you got to know what you're looking for. And then, of course, the Fed. The Fed, I'm curious to know when the first FOMC meeting is going to be where he'll talk. I like to get that out of the way, try to get some read on him, because obviously, Trump put him selected him for one thing only, and that was to cut rates. So, and the fact that they're backtracking, saying they're not going to cut rates, because I know the data's coming out, it's going to tell us everything. So I'd like to hear what he has to say in the first FOMC meeting. Outside of that, man, listen, if you got a long-term horizon over like the next few years from now, I think you're going to be just fine. I'm not stressed about this pullback and everything that's been going on. I just buy more if you can possibly do it. Else, don't get all beat up on this. Crypto is highly been manipulated. Ethereum should have gone a lot higher than it did. Bitcoin should have went higher than what it did. The on-chain data charts that show you all that truly do tell you it should have done higher. Obviously did not. So just like we said, don't expect those to work on as no one calling out your bottom at the same time. And at the same time, watch the over the next year. Let's see if the traditional markets start to form a topping pattern, or do they hit a next leg up? We'll see.
True. By the way, before we get out of here, I do want to give some shout outs. Our good friend showed up, Mr. Will. He's saying, I'll tell you how this ends. Explosion noises.
Yeah. But the question I would have is like, so will the win? The question is when, and what are the telltales of will show those cracks? That's kind of what I'm looking at too, because I know it won't end well. Of course it won't. If anybody who's never read or read up on the theory of the what is it? I'm sorry, I'm drawing a blank right now. Every 400 years, the fourth turning. If you've never looked into that, or how the rise and fall of empires over the thousands of years, like you can look at the Dutch, you can look at the English, the Spanish, and so forth, the Roman. Typically it ends that way where it loses it. But now we're moving into this world where I don't think it's necessarily going to be one country that kind of rises to power. I think it's going to be more global power. But how long does US dollar stay in there as being the world leader? Who knows? That's going to be basically the end of it all when that happens. But that could take a long time. This is not something that happens over the next 10 years. Normally it takes a lot longer. But it's another reason why AI I think is a big threat. It has a lot of people concerned. But that's part of another show.
That it is. Tell you what, we got one more friend stopping in here, Mr. Moonpill, Rational Optics, giving us a little bit of a hype train. Thank you, sir. Always a pleasure to see you. I hope you guys had an absolute blast in Vegas. The Crypto Mindset meetup happened this last weekend, I believe. I got to check in with the boys and ask how that went, because I know they're always a good time, and I was bummed I couldn't make it to this one. But yeah, outside of that, that is all we got for here tonight. If you enjoyed the show, please do us the YouTube pleasantries, like, comment, subscribe. Love to see all the comments on Replay Gang. Appreciate all you guys that are watching the video after it goes live. And for everybody inside the Telegram, we'll catch you guys in there. But that is all we have here for tonight. So we'll catch you guys next week, 9 p.m. Eastern time on Thursday nights, as always, where we will be trying to navigate digital finance all together. And boy, it's been getting a little rocky lately, but just keep the time horizon long. We'll make it. Outside of that, ladies and gentlemen, thank you so much for joining us here. I am Zenith. This is Tracker. We will catch you guys next week. Until then, good night.